Hey, my name is Jack Nicholson and welcome to my YouTube channel. In this video, I want to talk about interest rates, the Bank of England rate. A recent survey from a mortgage company called Butterfield Mortgages has said that a lot of brokers are expecting interest rates to go up in 2026. In this video, I'm going to talk about the survey, what they're expecting, how many are expecting rates to go up, what they're expecting to happen to the property market in 2025, and much, much more. So if you're new around here and you haven't done already, do subscribe to the channel over there and hit that bell notification. We're on the way to 39,000 subscribers. We're at 38,600. So do subscribe so we can get that to 39,000. And let's get some more views on this video because we want people to be aware of what the expectations are in the market. How do we do that? Smash like, tickle like, do something to that like button. That massively helps with the YouTube algorithm and that will help us grow the channel. So thanks to everyone that does that. So if you watch the channel, you might notice I'm a bit smarter than normal at the moment. I'm just about to head off to Guildford. I'm actually being interviewed by a BBC journalist about the mortgage market, what the expectations are on that. So once that's done, I'll hopefully get you a copy of that on the channel so you can see what we're expecting to happen in 2025 and beyond, at least from my point of view. So do look out for that. So there's a company, they are called Butterfield Mortgages, and they are a lender. And they have surveyed 300 brokers in the UK with their expectations on what's happening in the market. Look, there's a lot of uncertainty in the world right now. The UK economy is very close to being in a recession, and it's going to be really, really hard for a lot of business owners once we get to April. And the reason for that is that national insurance costs are going to rise significantly for employers. That hits businesses very, very hard. You've got the minimum wage going up as well. And you've got certain sectors where business rates are going up. On top of that, you've got the energy price cap going up in April as well, which so for some businesses, that's 4 different things that are going to hit them really, really hard. And because of that, the economy is expected to slow down and could creep towards a recession. You've also got over the pond, the Americans with this tariff stuff, giving massive uncertainty to the stock markets and making it very, very hard for businesses to operate. One day the tariffs are on, the next day the tariffs are off. So that's hitting Canada and Mexico very, very hard, but we're an intertwined economy. Europe's expected to potentially get those 25% tariffs as well. Now, if you're a UK business, maybe your customers are in Europe and they're going to see a slowdown, which inevitably will slow down UK business. So this year has a lot of uncertainty. And if these tariffs are implemented all around the world, inflation could rise its ugly head again. So in this survey, 69% of brokers felt that rates would increase by 2026, meaning the Bank of England base rate. So what that would mean instantly is that tracker rates would go up. That wouldn't be great. And it also would likely mean, not definitely, but likely would mean that the mortgage rate that you get goes up as well. Now, mortgage rates are impacted by the Bank of England base rate, but they're really mostly impacted by something called the SONIA swap rate. That's the rate that HSBC, NatWest, and these other lenders borrow from bigger banks. So that's really, really important to understand. Now, look, if the Bank of England increases rates, there's a high likelihood that the SONIA swap rate would go up, meaning banks would pass that cost on to you. So that's their expectations. Now, we're sitting at 4.5%. Now, these increases with the Bank of England base rate aren't expected to be massive. We're talking like 0.25%. And these would be born out of the fact that inflation would be higher at the moment. What else did they do in the survey? Well, 67% of the brokers that were surveyed felt that the market, how busy the market's going to be in 2025 will be impacted by rates. So what they're saying is so many things are hitting the property market right now. You've got a slowdown in the economy. You've got Halifax data the other day that's saying house prices are down. That can get contagious. If lots of people read that and see house prices are dropping, and we get more data to say that in the next few months, then people will pause what they're doing. No one wants to buy when house prices are dropping, and that will slow down the market considerably as well. The stamp duty increase that we've got on first-time buyers from 425,000 currently to 300,000, that's expected to slow that portion of the market down significantly from April 1st as well. You've got leasehold reform, you've got renters' rights. All of this stuff is slowing down the market. So the expectation is that from these brokers is 67% of them are saying the only way the market recovers in the last 3 quarters of the year, because we've had a busy start, the only way that we recover from this is if rates drop this year. If they don't drop, the expectation is that the market will be very, very slow. From speaking to my broker, he's saying it is slow at the moment. There isn't lots going on right now in the market because lots of people have got a wait and see approach. They want to see in the next budget, do rates drop? Does stamp duty get dropped again? Do they do a U-turn on that stuff? That is what people are looking for. If it doesn't, then people will want to see what impact does this have on house prices. And if they start to drop, which Halifax has seen a smidge down, then you will see a slowdown in the market. So 64% of the people surveyed are saying all of the regulation, all of the stuff that's going on in the global economy is just giving a lot of uncertainty. And so people will buy houses, people will sell houses, but lots of people, as they did in 2024, will sit the market out. In 2024 and 2023, the market was considerably slower. How the market got moving again was cuts by lenders. So prior to the Bank of England even cutting rates at all, lenders dropped rates to stimulate the market to get lending going. And that did work. October, November, December were busy months. We had 2 rate cuts as well, which moved the market considerably as well. But now we've got the opposite. We've got talk of rates going up. We've got talk of inflation sticking around. We've got talk of a global trade war. And that's why these brokers, surveyed at least, have a little bit of uncertainty right now. So look, if you want to make some money in a down market, because there are good deals to be had, we've just made a new ebook, which I'm going to link below, which is how to make money in a down market. What strategies should you be looking at? We cover things like investing and adding value to properties, how to buy from auctions, serviced accommodation, high cash flow strategies, and stuff like that. So do click on that ebook and grab that. Do smash like, do subscribe to the channel and hit that bell notification. We've got new content every single day on the property market. And check out all the other content on my channel as well, including this video right here.